Tradeometer YM overbought.
All right, hey, what's up, everybody? DayTraderRockStar here. It's about 2:30 here, just in the middle of a trade. We're starting off the HPS watch list. Welcome back, and what a day! And I've got a lot of great things here to talking about it all day today. Early this morning, I was on the mic really early this morning here, pounding the table for a major rally today, and I think we got it. We got the rally. It's going to begin a big rally going into June. I want to talk about that. I want to talk about a lot of different things on this watch list. So good luck on the rest of your day trading as I go through this and do some research and kind of walk you through the last couple hours of the day. We're actually right at the highs of the day, and I expect this to get a nice rally at the end of the day. So we're going to be watching that too with you. So first thing we're going to talk about, first thing, happy Memorial Day. Memorial Day is here. It's a good time to reflect back on why we have a Memorial Day, and let's remember all the people who have served this country and given their life for this country. All right. It's going to be a nice 3-day weekend. We're closed on Monday. We'll be back here on Tuesday, and I expect Tuesday is going to be actually the 31st of March, and that's going to be the end of the month. So we're actually going to probably see something with the end of the month. Window dressing going into June. Again, I'm going to get into that a little bit more. Just focus on this to see if we can actually pop. I'm looking for a big pop here. Big pop out of this. Let's see if we can get it. And then I'll just take profits and then we'll concentrate on some research right here. Markets you can see up 74.75. We'll let this play out here as I switch over to a couple of the charts here. I'll keep an eye out for that tick strike in the background. It helps me determine, and also the tradeometer, if we have any high ticks out there, it'll alert us to that. And the rock bot here is very strong. We're up at the high, so no big alerts there, but just pay attention to the crickets. And everything I mentioned here is on Day Trading Radio's dashboard. And if you might not have the tradeometer, you get the tradeometer with the I'm hearing things go here. You hear those? You hear those crickets in the background. Here's that big pop here. And I like to call these the $20 bill trades. I just take a trade, close it out as it gets near 20. I'm just going to close that right there.
Order filled.
And push this over $200 on the day. And I've just been nickel and dime in this market, just 1-2 contracts, just on the setups. A very strong day. There's only 3 techniques I'm trading. 3 techniques. And again, I'm not stressed out in this market. I'm just waiting for my opportunities. And in this case, in a very bullish market, we're looking for what we call a 2020 bull flag. That is probably one of the better setups, or what I call a triple stochastic rotation. Now, these things are important, especially for beginner traders. You don't want to get too much. Look at that. Oh, look at that. What happened? They just took out the highs, and this classic taking out the highs, getting people in there, and then pulling the rug. It happens so often. And again, hopefully you understand a little bit about markets, but that's what you have to be careful of. That's why I'm always taking profits, and I think that's one of the best things you could do is buy on the rotation up. See the rotation up, and sell when you get above that 80 line. Right when it gets up there, I have I'm just saying, you know what? My job is done. I found another $20 bill on the table, on the floor. I'll pick it up, and I'll keep on moving along. So not to say we don't get higher, but this is typical of the shorter term time frame. I am dealing with a 1-minute time frame here. You could trade 5-minute, 60-minute, daily, weekly, depending on what time frame of trader you want to be. I'm a short-term scalper when it comes to doing the show and analyzing different areas in the market to take advantage of that and making that little money. But you could easily not be involved as much as I am and just take the same setups, same indicator setups, the same strategies, the same methodology, the high probability methodology, the 3 setups. You could take those on a bigger time frame. So that means that, hey, maybe I'm not able to sit in front of the computer, like Johnny does, or like everyone else in the chat room does. Maybe I can't do that, but maybe I can take advantage of the moves over a week time. So I'll look, we could look at those same setups, and we wait for them to set up on a bigger time frame, a longer time frame. Maybe the 60-minute time frame gives us that longer term move. The daily time frame gives us a longer term move. The weekly gives us a real long term move. So There's all different ways of profiting from the markets. The important thing is understanding what you're doing, and that's what I'm here to do, is kind of teach you some tricks of the trade. Tricks of the trade. All right, very easy. The setups are perfect. The setups, the rotation, the bull flag. This was a bull flag right here that we'll call a 2020 bull flag. Actually, on the Rockbot, well, I think we can actually. Let me see if I can do this for you right here. If I could go to, let me fix this. All right, the bunch of scripts you have. If you have the Rockbot code. And you have the Ninja Trader platform, you could run any of these scripts. These are trading scripts. These things that identify these levels and even trade for them. I like to just identify them. That's what we have the Rockbot channel for. So the Rockbot channel is identifying these things on the 5-minute time frame. But on the 1-minute time frame, I just activated what's called the Rockbot bull flag. And the parameters here are very they're standard, default at 4, but you could change these and understand that your profits will probably be a little bit more in this environment. So I can move that up to 8. I can move this up, I can move the stop losses up a little. I can move the second profits up. I could use all these things to my advantage. But what I want to do is I want to just I want to activate this, and we're going to see if the bull flag that I just got into, because of my criteria, is going to be identified by the bot. So let's click on that. Let's apply it. And let's see if it, if I could get this thing to identify that. It should pop up right here, right, or was it right about here as I took it? And again, the criteria is for a pullback, stochastics above the 80, the rotation under 20, and the price holding above the 20, and that's going to give us that flag. Now let's see, it's calculating. Let's see what happens here, and it'll back test and place these things in these levels. Maybe it doesn't pick it. Maybe there was something a little off on it. I'm not 100% sure. It's going to identify that. Oh, look at that. Look at that. And it took profits right where I actually went a little bit higher and took profits. No, I took profits right when I took profits. The market's going to go higher either way, but that is a textbook bull flag. The criteria, we could identify it live. That's what I like to do. Identify it live. Fast rotation. Stochastics above 60, that's the 60-10. The 60-10 stochastics above 80, sorry. And now market here starting to rip a little bit higher. So watch this market here go. Oh, so that was really key. Now let's go back here and see if there was any other bull flags today. That was actually, here was another great one. And again, you can see take profits. What do we have here? We have a nice move up, the pullback to the 20. The fast rotation, and just holding above 80, and you can see a nice little move. Now this kind of came back down afterwards, but not after taking profits it took profits on the way up. And this is just a great one technique in a very bullish market. A very bullish market. I use the bull flag technique, and I use the
Tradeometer ES overbought.
That is the Tradeometer in the background. Now the Tradeometer is something else. It also helps us with that. It tells us it's time to take profits. Overbought levels mean multiple time frames. Multiple time frames. If we go back over to the S&P, the other chart here, is when we start to see that rotation, and there's also kind of a small little divergence here. But the market's very strong, so I'd be cautious on any type of divergences. But the Rockbot here, letting you know that we are getting overbought. Here's a look at the Tradeometer, and this is the alert that we just got on the ES. Now you can see there was an alert back here and a nice pullback. There was an alert here, a nice pullback. Look at the buy signal here. And a very bullish market is when you want, and someone asked me this yesterday in the chat room. When should we use when should we use the Tradeometer? The Tradeometer and the Rockbot, two different things. The Tradeometer is multiple time frame setups. The Rockbot is our scripts to identify the 3 most important trade setups: the divergence, the flag, and I have some other scripts I won't go into right now, but those are the 2 main ones. So these 2 things work great together. As you can see, the YM actually made a little high here, and it made a lower high here where the ES made a higher high. So there's a little relative weakness there. You see the NQ also kind of make it not taking out the previous high. And these are just you'll get used to all this. This is also available for members here at Day Trading Radio. And as I'm talking about, let me just kind of give that plug. We do have that lifetime sale, which you get everything for life. You don't have to pay for it. Of course, one-time payment, and you can split that up to 2 payments. But the one time, you get the RockBot, you get the Tradeometer, you get the RockBot code. That means if you have the Ninja Trader, you could run these scripts on your own platform. I help you set them up. We have, and there's so much more. Plus, of course, Day Trading Radio itself, the platform, the trade alerts, the high probability setup, the watch list that you're getting, and everything else that goes along with it. So there is a lot to be had, and it is a really good sale. Let me show you it right now. This is it. It goes from May 25th to June 3rd. Premium lifetime package includes everything that we have, all our bots, all our courses. The School of Stock courses are super important. That's how I teach. These are about 40 lessons, 2 big courses. Sold separately, it's about $640. You get that with the lifetime. Of course, Day Trading Radio and the lifetime of Tradeometer, which typically goes for $400 a year. So all this you get for lifetime. Normally, lifetime package is $19.95. We're just doing it for this week only, $9.99. So basically, you're getting $900 off of it. So take advantage of that. It comes with everything. All right, School of Stock. Just head over to Day Trading Radio, and you'll see. If you head over to Day Trading Radio, and here's the RockBot. You get the Tradeometer, the high probability setups, everything else that I just mentioned. The chat room, which is awesome. The School of Stock Memorial Day sale. Sorry to get through that. This is a member supported site. All right, so we do appreciate our membership people to come and support the site. We've been trading here since 2007 live. Every single day. I've been trading since 96 live. Well, 96 as a full-time trader. But we've been live here at Day Trading Radio from 2007. It's 2022 now. 15 years. Wow. All right. So that's that. Head over to Day Trading Radio. You will see the link there. If you just go to Day Trading Radio and you'll see the link. Just click on that. Normally, if you go down here, and you see that lifetime membership, it's $19.95. If you click on that, you could just go to the Memorial Day sale. Click on this one right here. This is the big one. Click on that, and then you're set for it. If you have a problem with the payment, we can split that into 2 payments, but it's important that you contact me or Paul before that. We could split it into 2 $500 payments, but it's very important that you do that. That's only going to be active until the beginning next week, right at the next week it ends. And then we're going back to the original price. The original price is already up there, so just don't click on the original price. Click on the Memorial Day special price. All right, that is done. Housekeeping is done.
Tradeometer NQ over bot.
The Tradeometer here is giving us another perfect sell signal here. You can see those arrows. It talks to you and everything. All right, so let's get to the back to the charts here. Markets here pushing back up to the highs. Now, what I want to talk to you about is my call today of a short, medium term bottom. What do you mean by medium term bottom? I think we have a nice rally ahead of us. How high does that rally go? Well, stay tuned, because it is going to shock you. It's going to shock you. And it started yesterday, and we called for it today. We called for a big rally today. And I've been continue to say, do not go short today. We're going to scream at the end of the day. All right, here we go. I could just probably be long and just let this thing just continue to run up. We're right up against the highs again. Right up against the highs. LABU, there we go. Big pop here in the market. Big pop in the markets.
Tradeometer YM over bot.
All right. And before I forget, that's not the only way to get the RockBot and the Tradeometer and stuff like that. You can do a monthly subscription on that too. So there's different packages there: monthly subscription, yearly subscription, etc. So there's different options. I just think that the value you get on the sale shouldn't be passed up. So it's in your court right now. The techniques here are perfect. Guidance here is perfect. Let's get to the big call today, Johnny. Tell them what you see. All right, Johnny. Thanks for passing it over to me. All right, market here screaming higher here. This is what I expected at the end of the day. Last hour rally here. And then we're getting that big pop here. I should stay in everything, but I am in the process of doing my watch list. But hey, we're long all stocks. I have no shorts on the table right now. And I expected this to continue to pop here. I've been posting it out there on social media, expecting the big rally beginning of June. And where are we going here? Where are we going, and why are we going, and why are we doing this? First of all, first thing I want to show you is this fear and greed index. This is something that I want to point out to you. We'll go up here. And market sentiment. What is the people out? What are you thinking out there? What is everyone thinking out there? Well, when you have so many people expecting one thing, the market loves to do the opposite. And and at this point here, we were at extreme fear. Just at the beginning of the week, we were probably down. I think at one point we were down. I don't know what we were. We were down to 10, 11 earlier in the week. Now we're at 20. We're starting to rise right now. Yesterday, I think we were at 17. Before that, it was 11. So the last couple of days we've been pushing, but we're still in the extreme fear area. Everything here, even the market momentum, the stock price strength, the market breadth, all very, very, very negative. You can only get that point before, as they say, it's always darkest before the light. Well, this was the darkest before the light scenario right now. Now, there's a lot of things going on. We had some economic indicators out, and that's going to play a big part of this. The inflation fears that are going to start to recede, and we're also going to get, we're still playing cat and mouse with the Fed, and the Fed is going to continue to raise rates, which they probably will, but they're also going to probably at one point get, overly or overshoot their targets and stuff, and once they start to pull back, at that point the market's going to rally. But at that point the market's already going to be rallying. So we're already starting that, because we're going to start to feel that, and then the Fed's going to come out and say, all right, we're going to be we're going to be pulling back a little. Maybe we won't do raises every month. Maybe we won't do a 50-point basis raise hike. These things, however they come out and they portray it and how they make their feelings, will play a part in the market. So all these things combined, this is probably the worst it's going to be, because it's been pretty bad. It's been very bad. I mean, the war is going on. The food issues, a lot of people talking about, there's going to be food shortages, there's going to be gas shortages, Russia, Taiwan, China, you name it, monkeypox. It doesn't get worse than this. And when things are so bad, and when you get so depressed and you get angry, that is when you got to be stepping in. It's a hard concept to believe in, We're so overwhelmed by negativity in the media, and they make you believe that the world is going to end, but the world's not going to end, Actually, if we look at the charts, this is just part of a big cycle, and this cycle is just going to continue. This is a textbook. This is going to get parts of this is where we're going to talk about the technical level. I am a divergence trader. I am a stochastic divergence trader. I've traded divergences for years. I understand what they mean. I understand how they react. And when I see them, and I tell you, if I show you a divergence, 9 times out of 10, you're going to get a move in the direction of the divergence. We have a huge divergence playing out in the daily chart. Now, there's a lot of lines on here. I'm not going to, there's a lot of lines that I pay attention to. There's a couple important ones, the darker ones. The darker black line. Here's a nice, what we call a 1, 2, 3 channel. And I'll go back and explain this chart for you. We had a beautiful run here. The market here got hit with the coronavirus right here, and we bottomed out. The Fed came in with a tremendous amount of liquidity into the markets and throwing money at everyone. We got the checks and stuff, and the market ran up aggressively, and we got inflation. At one point, we broke down. Now, the breakdown here is, technically speaking, we had this trend line, we came down to it, we hit a trend line, we came down to it, we hit a trend line, came down to it, and all of a sudden we had some more corona crap going on, and eventually broke down. And that was the kind of the straw that broke the camel's back. I mean, it really was. This was the camel's back. This was the straw, and this red line represents when that happened. All right, that's we typically call it the scene of the crimes, when something big happens in the market. In this case, it's just a technical breakdown. So we break down and we come down. And there's no guessing of where you're going to go down. We have to let things play out sometimes. Was there anything here telling us where we're going to bounce? There might have been. I don't really remember at the time. It was a 10% correction area, and it came back to October lows. So that was a pretty decent 10. Everyone's talking about 10%, quote, 10% correction. 10% correction. That's that's typical of the markets. For whatever reason, the markets hold on to that throughout the years and say, but this is a new market. Things that once worked back in the day 20, 30, 40, 50 years ago are not always going to be the same thing. We're going to establish new levels and new reasons why the market goes down further. I wouldn't stick to that 10% for whatever reason. The first test of a 10%, we got a nice move. We pushed back up to the 50, and then we came back down, and we had this big reversal candle. Got a little bounce, and then we came back down, and we actually had our first divergence. Now, what's our divergence? A divergence is, and when we talk about it, is a low on the stochastics relative to the price low, a bounce into the price, a bounce with the stochastics, and then a retest back down to the lows. But the stochastics refused to go back down to those lows relative to where the recent price is. Now, this was a big candle, so it's hard to guess if this was kind of an extension too far, a flush and a reversal, which I like to do. So I always put my trend lines at the closing prices, especially if we have a set of them, that are choppy. Lots of times we'll go through and we'll flush out, break down, overextend, call it what you will. We'll overextend and shoot back up. So you have to take that average. The chart will talk to you. It'll say, all right, you had a good pivot here, you had a closing pivot here, you had a closing price here, and then you had that flush and reversal. So this really is the spot you want to look. And we came down and we confirmed it. But the confirmation of that, if we came back where the stochastics were at that point, oversold on that candle, we're still holding off of this level. So there was a divergence in my mind, what I call closing price divergence or relative divergence between this closing price and this closing price. This closing price was the low. This closing price was a higher low. That's a more complex version of this divergence, but it works excellent. And from that point on, we had a nice rally. Now look where we rallied to. I put a target up here, and we got to about a point away from it. I mean, it was an incredible move up. We broke through the downward trend line. I said, watch for the breakthrough and watch for this zone up here. That zone represented the area of what we call the scene of the crime. That's where we broke down from. We got right up to that, and then we sold off, consolidated, broke down, and then all hell broke loose, and we sold off. And then fear came into this market in a big way. So we had the big move down. We kind of flushed out again, flushed through that channel line, came back strong, moved up. So you had your first low here, moved up here, and again, this red line here is an important red line. Like I said, I'm one of the few people, I believe, that have this line here, which represents an area of a top of a trend line. But what's interesting about this, as I marked off with my blue arrows, we've touched it multiple times and we tested it multiple times. So we touched it back there, we touched it here, we kind of chopped around it, and then we came back to it and tested it, came back to it and tested it, came back to it here, tested it, bounced, came back to it here. We watched it at that level, but we broke down through it, flushed out, but then we came back up here and tested it again. So you see how we tested that over and over again? And then we sold off and we came down. Now we had a low, a lower low, two big reversal candles. At that point, we liked that. We circled it off of this, and we had the higher low on the stochastic. The higher low is right here. Now that's just a history of what's gone on. At this point, we became very bullish in the market. We had a big rally here. We watched this downward trend line. It was touch and go. Honestly, I was like, all right, do you feel like this is a bear market rally? or do we feel like there's another flush here? And in a recent analysis video, we talked about the 25% correction area that we typically see in a recession. We'll also talk about the 50% retracement if we go back from the coronavirus lows to the coronavirus high, that big rally we had. So those are interesting levels. And they, you know what? I'm going to keep them on the chart and see if they ever do come back into play. We'll have them on there. But a divergence is a divergence, and a divergence is what I live and die by. And we had a nice one. We had a nice little divergence here. And where did we get back up here? We're back above this red line. We're back above some important key levels. And the fear is still very bad. The fear hasn't really lifted yet. And so we're going to see the market here going to climb this wall of worry. We're going to rally into this thing. Not markets will rally. People are going to be scratching their head. They're not going to chase this yet because they're going to call this a bear market rally. And you know what? I'm borderline, on that boat too. I've seen a lot of bear market rallies, and this looks like one. So I wouldn't be surprised to see that commentary coming out there. But I want to go a little farther and say that this is not going to be a bear market rally. We're going to actually get a little further push higher than a typical bear market rally. It's going to push the envelope, and it's going to cause people to reevaluate and probably reposition. Once we get a little bit higher, which I think we can get higher, I think we can get back up here to this trend line and break through that trend line and get back up to the 4,400 level. That's a significant 300-point rally on the S&P. That's pretty intensive. That's intense. That's just the short term. If we get back up to that brings us back through the 200-period moving average, takes out this channel line. What are people going to be doing at that point? They're going to be wondering, well, at what point are people going to start to say, hey, I need to get back in, or hey, this is a bear market rally. We've gone too far. A lot of people are doing, saying that the PE for the market is still too high. We need to get down there. But again, who's to say what the PE should be, really? I mean, relative to history, we could adjust. Those levels could adjust also. I'm not on board with that. I'm more on board with the month of May is done. We have a market that is bouncing off of divergence. We have tremendous fear in the market still, and we have a setup here going into a new month, end of a month, window dressing, etc. And I think it's about time to push traders to a point where they're going to have to make a decision. And I think that decision, and again, let's just take a look at that recent low back here. I should put a new line in here. That's right above us. That's 41.66. That brings us down. The 50 is going to come down. That 50-period moving average, a big level, 41.66 to 41.80. I think we get through that. I think we're getting through that 4,200, 4,300. Today I saw some people in the room. Well, we need to get above 4,300 for the bulls to get involved. You need to be involved on this divergence. You need to be involved yesterday. I mean, I don't want to be waiting for 4,300 then to make my choice. Then we're running into resistance. I think you need to be involved here. I think we got a big run to 4,300. At that point, yeah, we could run into a little problem. But you know what? Things could be very interesting going forward. We have China reopening, about to reopen. All right. We have the Russian-Ukraine war continuing. That has to. They're going to realize that there's going to have to be a resolution there. All right. I don't know how it's going to be, but once there's some kind of resolution there, it's not beneficial for anybody for that war to continue, especially Russia. There will be a way for them to save face or wind things down. All these things will drop oil like a rock. There's a lot of talk of oil going to $150. I don't see that happening. I think you could short energy here. I mean, I might be going definitely a little bonkers here, but I'm not interested in the trade, oil up to $150. I'm really not. But I'm not I don't trade commodities as much as I trade other things. And that's my call on this. That's my call. I think we have a tremendous rally. I would even put a probability of getting up to that 4,400 level. as a good probability. Do we get back up to the highs? Do we get to the highs? If we get to 4,400, I have no reason not to think we could get back up to the highs. Things have changed drastically at that point. All right? And then we look back at the weekly. We look back at the history of markets. Just like back here, this was the end of the world. This was a zombie apocalypse, right? This was it right here, 2020 March. I mean, it wasn't getting any worse. The world shut down, and yet the market rallied. This is kiddie stuff right now. Yeah, gas price is a little higher and stuff. People are out working and stuff. The big picture over time, we kind of corrected, and this is the other thing that I wanted to talk about. What is the mean, the average slope of the market? If you stayed within a very healthy trend, this was it. And I talked about this on the last video, and this was our area. And at this point right here, we went into bubble mode. We kind of caused that blister. If this was the skin and we were just kind of just following the way, and all of a sudden we started to inflate out of this level, and we put this big blister in. We now come back all the way back down to the area we should have been if we just took our time in a healthy market. We didn't have this bubble, this little bubble. If we continued just to kind of live a nice little rotation before the coronavirus, we were at this point. We were moving up. Yeah, there was some very bullish activity. We had the administration. Trump was bullish for the markets. The market was acting good. It was healthy. We got unhealthy here. This was an unhealthy move. We got this bubble going, and you could see, think of this as just the normal projection of the markets, and then how we got away from that. Now we got all the way and flushed through it. Now we're back at the normal projection of the market, and a little bit back above it. So there's a lot of positives here that I like, lots, and you can hear that market here ripping. I should be actually just letting this thing go. And again, I'm banging the table all day long. Stay long, stay long. Don't short this. Going higher, going higher. I'm watching Bitcoin out of the corner of my eye here. It is not performing. Is this a warning signal for Bitcoin? Will people be getting out of their Bitcoin to get back into the markets? All right, I don't know. But before this week, these things were paired together. They were coupled really good. The Bitcoin and the NASDAQ was really working well together. This has since decoupled from the NASDAQ. As you can see, from 10 o'clock on, it's been going down. From 10 o'clock on, this market has been ripping. There is something going on here on Bitcoin and crypto. So something to consider on that. Overall target. Big candle today. When we have big candles like this, big candle, we have follow-through candles. This is actually on the weekly. Big weekly candle. Should have some follow-through. All this goes out the door. All this goes off the table. If there's any type of black swan sort of thing, meaning a nuclear scare, China coming in and attacking Taiwan, anything like that, Russia pulling out some kind of tactical nuke, Putin doing some desperate things because he has the big C cancer. Who knows? I mean, there's always going to be something out there that you have to be, and I have to put that out there. I'm hoping that stuff doesn't play out, and if it does, then all bets are off. But until then, I'm looking for a nice move up here. We'll call it 4,300, right now. But I could see us going higher, and maybe one of the first people to say, I don't think it's out of the question that we get back up to highs. So that is the analysis. That's the market radar. I think there's a great opportunity here with the daily divergence. There's a great opportunity with a huge weekly candle. The other last thing here, weekly candles. Last time we had a weekly oversold candle was 2020 coronavirus lows. Right here. We haven't really gotten oversold underneath that 20 line since then. The last time before that was 2019. And what happened? Huge move. Huge move. Here we got close to it, but we never got underneath that 20 line. We kind of got rotated back up, and then we came back down. So now we have a pure oversold level. The odds are, and if we look back on the weekly candles here, this candle oversold, huge rally. This candle oversold, huge rally. This candle just touched it, doesn't matter, huge rally. Underneath the 20, huge rally. Underneath the 20, huge rally. Underneath the 20, case closed. My call is out there. Hope you enjoyed that market radar video. Now I'm going to do another video for members only. I like this. I want to put this out to the public. I want to do another members only video, and we're going to talk about the stocks that you need to be in now. All right, so I'm going to get that video out next, and I'll see you guys. Have a happy Memorial Day. Don't forget, take advantage of the Memorial Day sale, and we'll talk to everyone on Tuesday. For members, keep an eye out for another video to come out right after this one. It's going to take me a few hours, but it is Friday, and this will be out probably about 8 o'clock, 9 o'clock tonight. I'll get it out to you guys on the stocks that we're going to be in and that we're in to prepare ourselves for this. All right? Have a great one. I'll talk to you soon. DayTraderRockStar signing off.